Welcome to week number 21 of how to trade the Forex calendar. We're starting off the week by having a look at the cftc positioning. I am looking at the Scotiabank report for the cftc positioning from last week and still seeing a steady climb in euro longs building for most of this month and the month before. So we've seen a bit of a swing happening from the start of April, and it is continuing getting stronger. Open interest is continuing getting stronger, which I like to see, which is pushing momentum within the trend. So over 700,000, which is quite positive. Surprisingly, we saw a little bit of reduction in the long positioning, adding of short position GBP, which did drag the overall net positioning a little bit down, still over 2 billion. Looking at other assets, Aussie, pretty standard, nothing hugely happened. Same thing with Kiwi. And on the gold side and Canadian dollar, I think we saw continued building up in bullishness. So gold bullishness continuing, and Canadian dollar is continuing to build its bullish positioning as well. So you kind of see where the trend is going with some of the commodity currencies. Canadian is seeming to be the strongest from them all, and in the euro pack, or one of the core major assets, you can see the euro is outperforming and in terms of positioning. Having a look at inflation expectation, I've overlaid this chart with AED/JPY as it really reflects, the pair really reflects inflation expectation to the day. We saw inflation expectation sort of top off at the 2.7, is playing a little bit lower. You are expecting these levels to hold, but continuous grind up possibly till we hit the 3% mark before we see some real panic set in. But until then, specifically if you do trade yen pairs, keep an eye on what this chart is doing, because the rest of the yen pairs will follow lead, and it also gives you understanding of why most yen pairs been rallying for over 1,000 pips starting last year. It's just put things into perspective. When inflation picks up, Japanese investors export more money as they can find yield abroad. Having a look at the next week, a quick recap about the last 2 weeks. So I've done only one video that was covering both weeks. We had our eyes on gold to reach 1880, which it did, and I believe there's a little bit more upside in that. Let me find gold here. So I believe there's still a little bit upside in that because of the way that US yields are trading right now. They can't seem to find a footing. So as long as they're suppressed, you'll find that gold will push up into the 19 area. We saw EURUSD also take the leg up to 122, and it's starting to find a temporary ceiling about 122. It doesn't seem to want to be climbing higher than that in the near term, which is quite interesting because there's a lot going on for Europe. So you got equity inflows, US investors and abroad investors are all interested in US and Euro equities. That's driving EURUSD interest up, but also you see that the Fed is just printing money and with a QE program and providing cheap dollar everywhere else and putting upside pressure on the euro. So in the long term, I really would expect EURUSD to have absolutely no problem breaking through these levels, and I'll bring it up to the weekly so you get a better view. Breaking up these levels and should have very little issues climbing towards 125, possibly 127 for the long term. In the medium term, as we are ending the month, I would like to see EURUSD dip a little bit, just so you can take a breather. It's always good to see some healthy rejections before finding another leg higher. So for the near term, specifically next week, I'm really seeing EURUSD contain under 122, with the downside being several levels that could get tagged all the way to 1940s for the next week. Also looking at GBPUSD, I had this chart open earlier. Now with GBPUSD, there's an interesting narrative building. Market is thinking, well, UK economy is doing great, household spending is fantastic, it's supposed to continue. So UK has got a lot going for it. Be that as it may, the market kind of front ran a lot of that. We started a big rally, I believe it was some point in February. Here at this point, market was still not sure if the Bank of England will start cutting rates, or will they be going negative rates possibly. So at this point, all these fears faded away, and GBPUSD really found a really strong leg higher. Now it's kind of continuing on the same narrative. It is still very positive. We saw a couple of declines in the past month, but realistically this trend should continue. I am mindful that we had a gap on the weekly opening 2 weeks ago that still not get closed, and when things like that happen, I like to see is there anything that can point me towards a short possibly. And when I overlay the UK gilt yield chart, which is the 10-year, I can see that yes, possibly we should see GBPUSD trade back into that gap close, which is sitting about nearly about 150, 160 pips lower. So I'll be mindful that could happen, specifically post Bailey's speak on Monday. So I'll be looking at the London fix at 4 p.m. on the Monday to see if I can establish a short capturing that downside, because I like to see that gap close there. That was post the council elections, was understandable. We had a bit of a rally, it was quite strong demand, but at this point I would like to see that a little bit moderate and that gap to close, as it wasn't anything too dramatic to be able to hold off. So that's for the first half of the week. Then we're moving on to the RBNZ meeting, which should affect the Kiwi. I am actually a little bit against sentiment, what the rest of the analyst world are saying. The rest of the analyst world are saying NZD bearishness, or the RBNZ dovishness, so to say, has kind of found a bottom. They can't get any more dovish than that. NZD should find its next leg to the rally fairly soon. I'm a little bit against that view in the short term. I think still a little bit more pressure building in the New Zealand economy, specifically what we saw with inflation, the data that came out, I believe, a couple of weeks ago. It is not looking as rosy as you would imagine. So I'm thinking that the RBNZ will go out of its way to see if they can even press NZD further down while it's still quite on a weak footing. So I really expect the NZD to find another leg lower. I think that could be better expressed with Euro NZD, possibly, as it did already have found some really strong momentum. I think it can build on that and capture 172 in the short term for next week. Run up to the event, or possibly after that, I would be quite I'll be on the defensive to try to take a bullish trade on that, but I'm mindful that there is an opportunity for furthermore upside. And then we move to one of my favorite events, which is the prelim GDP quarter on quarter. Now, itself, the data isn't really a huge market driver, but what it does with the S&P 500 is something very, very interesting that we tend to see every single time that data gets printed. So I'm going to take you to the S&P 500, to some degree the other indices as well. Every time we see that data print, which is not all too often, by the way. So last time we had this on the 25th of February, which was around here. So when we see these data prints, what tends to happen, we get a little bit of a dip, a little bit of a chop from the S&P 500, and then the following week you get a strong leg to the rally. So it was the 25th of February, same thing in November, more or less. Let me see if I can tag that. So here we had November. Now, we didn't get a strong dip like we said in February, but it had a bit of a chopping about, and then the next leg of a rally happened. So what I usually like to do is when it comes to the run-up to the GDP quarter-on-quarter print, I like to trade risk off, so try to sell currencies which benefit from a risk-on environment. And then the following week, which coincides with the start of a new month, I'll be trying to chase the risk on currencies, risk on sentiments, and also find buying opportunities for the S&P 500. So it's in itself not a trade signal. It gives you more of a timing what you should be doing for this week and what you should prepare for the following week coming. As the week unfolds, at the back end of the week, there's not a lot of data I'll be able to play with. Naturally, core PC is very important, but we're all already tuned to that idea that inflation is running hot, but it also could be falling off rather soon. So again, to round things up, I'm really expecting for GBPUSD to close that gap starting next week, ideally from Monday London fix towards closing that gap at the 140, I think it's 139.85, 83 area, so every broker might be a little bit different. I'm trying to close that gap. I'm mindful that EURUSD will unlikely break out of its range in the very short term, as there's no feel for it to do that. So I'm expecting this to play in the range, possibly even drop a bit sharper, and On NZD, I've been looking for weakness if I can capture any trades on that end as well. So one last thing I'd like to discuss, which is the US yields. US 10-year yields is quite pivotal, quite important right now in this market. So overall view is that we will climb out of this range and we start attacking the 2%, but right now we are caught up in this, and this is helping gold a lot, and it's helping another asset as well, which I look at every now and then, specifically because we're in this trending environment, is EURUSD. So EURUSD is quite sensitive to the 10-year yield, and as you can see, as EURUSD found another leg lower, and sometimes, some very rare times, and I believe now is one of those times, you find the EURUSD is leading the bond market. The EURUSD very obviously found another lower leg, and I think that that the 10-year yield, now I would be surprised to see it break out next, but I think the 10-year yield will start settling in this range and continue to play it down until the time comes where the breakout is warranted. But until then, expect EURUSD to trade a little bit benign as well. US yields to stay where they are, and that should help gold as well. That's all I wanted to talk about this week. I wish you great luck and great success. Thank you.